Well, hello and good morning, evening or afternoon, depending on when you are streaming this episode of SustyTalk, Edie's series of video interviews designed to keep us all feeling connected with the sustainability and energy conversation during lockdown and beyond. I'm delighted to have Ben on the line. That's Ben Colegrave, who is the Director of Corporate Finance for the energy sector at ING. How are you doing, Ben?
Very well, Sarah. Thanks for having me.
Anytime. And whereabouts are you dialing in from today?
I'm dialing in from London, sunny London today.
Are you working from home at the moment?
Yep, for the last year, and no real guidance on when that looks to return at the moment. Same, I imagine it's the same for most of the listener base as well.
Of course. I've had a few of these calls with people in London and they say, don't worry about missing London because I'm here and it's completely different. And I also miss London.
Yeah, well, I'd echo those thoughts. My views on London right now are just from my window.
For sure. And am I right in thinking this is your first sort of like video or podcast interview with us here at EE?
Yep.
Great. I know we've had Leonie and some other people from ING on before, but with that in mind, it'd be great to hear a little bit more about your role and your remit at ING.
Sure. So, Sarah, I sit as you said, in the corporate finance team, kind of focused on the energy sector. And what corporate finance means is I advise on mergers and acquisitions. So I advise companies either selling themselves, selling parts of their businesses, or I advise other companies that are buying businesses or assets for that matter, and again kind of focus on the energy sector. The other kind of area that I spend a lot of time on that's actually very kind of pertinent to this conversation is capital raising and capital raising for private companies, of which we've seen a large amount of activity in the new energy space in particular over the last kind of 12 months.
Great, and I'm sure we'll be talking a lot about that as this goes on, because I know when I got the pitch, the word hydrogen was all over it. So hoping to have a great conversation. I did want to hear a little bit more about. So we've heard from Leonie previously about how ING is aligning with the Paris Agreement and aligning finance emissions with the Paris Agreement. So how does that approach translate into what you're doing?
Yeah, good question. So I mean, as starting from the top, I guess ING's kind of core purpose is, or one of our core purposes is to empower people to stay a step ahead in life and business. And we believe that also means kind of helping customers and society stay a step ahead of the challenges they're facing. And one of those huge challenges, and probably the biggest, is climate action. And so that's something as a bank we're very much focused on, and how that translates to me in corporate finance is I work on the New Energy Transition Initiative, the NETI team, focused on new energy solutions and providing products and solutions to those particular sectors in order to empower them and to assist in their kind of growth profiles where we can. And I think banks have a major role to play in financing the transition to a low carbon economy in particular, and ING takes that very seriously.
So I wanted to ask a bit more about what you're seeing as part of the NETI team, because we hear a lot of time from end user business from the other side, like, oh, we're considering battery storage but XYZ, or we're piloting hydrogen in XYZ. So what trends are you seeing from your side of things in corporate finance?
Yeah, so the way that we look at it is it's not a winner takes all scenario. There's various different solutions and various different configurations of those solutions to determine optimal solutions depending on industry, geography, and all types of variables around that. So ING isn't standing here saying we are committed to solely hydrogen or solely battery storage. We are committed to looking at all solutions across the energy transition space in order to see, I think, where everyone is in order to kind of explore and kind of and go down a route of discovery to see what works best. And so a lot of our work the last kind of 18 months has been theoretical in nature, kind of looking at what the opportunity sets are, detailing that out, presenting that internally, And then start over the last kind of 6 to 12 months, we've been putting that into more commercial solutions. So, for example, in CCUS, we're heavily involved in kind of project finance advisory projects there. In hydrogen, we're actively raising capital for some of the more kind of innovative companies that are playing in that space. And the same for battery storage. And battery storage we've seen is a bit further along the kind of discovery path and the commercialization path. So we're seeing that translate to more material kind of merger and acquisition activity, as well as kind of debt financing. And we've been very active on the debt financing there. So we bring kind of a suite of products to encourage to assist in kind of the growth profiles of these companies, and ultimately these technologies and solutions as well. So that's in brief what we've kind of seen from a corporate finance perspective. And then kind of I've mentioned hydrogen, CCUS, and battery storage, obviously, to include in the mix. And what we're seeing a lot more of in terms of conversation is biofuels. As well, and so that's starting to become a pretty key topic for us as well. But I guess kind of speaking around the element of there isn't a kind of winner takes all. You look at, for example, most people will look at transportation and say battery storage has taken that market. That is where that is going, specifically for kind of passenger vehicles, electric vehicles. But then on the other side, you'd say hydrogen may have a place to play in that, because hydrogen fuel cell buses, for example, will typically have a range of around 310 miles versus electric buses, which will be 124 miles. And so you can see that in kind of the potential to decarbonize rural transport and to offer a solution for uninterrupted services for hydrogen on that side may be better than battery storage. However, battery storage may play catch up on that side. So it's a constantly evolving landscape, and something that we're kind of absolutely kind of learning as we go along, like everyone is, and trying our best to match that learning with commercial solutions as well.
No, it is a case in this space that certain things are happening faster than expected, certain things are happening slower than expected. So I presume you have to adapt to that fairly regularly.
Yeah. And so I think, I mean, generally what we've seen, the trends that we're seeing in corporate finance, I think most people will be aware of kind of, let's start with hydrogen. There's been a huge amount of hype around hydrogen over the last, let's call it kind of 6 to 12 months. And that's resulted in massive valuations being granted to hydrogen companies that are kind of involved in the hydrogen supply chain, and in one way or other, both kind of private and public. And it's obvious to see from a public perspective that's kind of really been apparent. So you look at, for example, in 2020, Plug Power had a cumulative return of 1,600% over the year. Fuel Cell Energy 1,300%, Bloom 400%. I mean, and so huge amounts of value being attributed to these companies. And I think what we're seeing on that side is a bubble kind of that's been created. We've started to kind of see the downside of that in terms of share market, stock market performance. But what kind of worries me, and something that we need to be focused on from a corporate finance perspective, is those kind of lofty valuations and how they translate to in terms of appetite and capital appetite for the sector, because you don't want to be in a position where investors and potential investors are being turned away from investing in solutions for the sector because of lofty valuations. And hopefully that's kind of there's kind of some kind of short-term correct, and I don't think it will have necessarily a lasting impact on these particular subsectors, because outside of that, you look at, for example, private equity. the number of funds that have been raised around, or new funds that have been raised around energy transition, is kind of enormous, and we're talking billions and billions of dollars kind of that have been earmarked for the energy transition space, and away from kind of brownfield infrastructure investment into kind of greenfield energy transition projects and companies on that side.
Mm-hmm. I think that most people watching will have seen some of these super ambitious forecasts and maybe put a little question mark over it in their mind. So thank you for that. And
yeah, it's interesting. Sorry, so just on that point,
yeah.
I think it's interesting to. There's another way of looking at that, which is if you draw a parallel to kind of the early 2000s and the tech bubble, mm-hmm. and kind of the huge valuations that were attributed at that point, and then the kind of subsequent decline and crash in those prices. If there are many of those companies that have now, if you maintain that investment, you'd be very well remunerated as a result of that. And so there is also a school of thought that actually, even if you see some turbulence in the pricing now, that in the longer term, we're talking 10, 15 years, that payback will be far in excess of where they stand currently.
Mm-hmm. Great. I was going to say, you talked there about a lot of figures about sort of the innovation providers, so those companies that are mainly new and are predominantly providing like hydrogen or CCS, but I wanted to talk about financing as well for companies that maybe their core business isn't that, but they're investing in it. So for example, CCS is getting installed at things like cement plants, they're looking at it for other heavy industrials, and then hydrogen could be installed at things like ports. So for businesses like that, I wanted to see if you'd had any trends in conversation as to, is it them coming to you and saying, maybe we'd like to explore X, Y, and Z at our facility, or is it the other way around? And has the trend changed a bit there?
Yeah, I mean, part of the enthusiasm for the new energy space as a whole is because you're seeing alignment amongst stakeholders, and a portion of those stakeholders, a large portion of those stakeholders, are industrial users, right? Mm-hmm. And so when you see industrial users taking an active interest in new energy, it starts to create a much more viable path towards commercialization. And so what we've seen as a trend from industrial users is, yes, absolutely, kind of inbounds to us, asking us about what we're seeing in terms of solutions in CCS, hydrogen, etc. And as a result of that as well, and as a result of their independent research, of course, is strategic stakes in a lot of those companies. So the companies that have been very successful in terms of raising capital, in terms of raising their profiles, have generally been as a result of achieving strategic investments from recognized industrial users, and with that kind of agreements for offtake or whatever commercial agreements that are in place, thereby kind of proving to investors and stakeholders that kind of path to commercialization. And so there has, in answer to your question, absolutely, we're seeing a lot of our kind of core and existing client base and well-established client base looking at these new innovations and looking at how they can benefit from that and implement that in terms of their own kind of policies around decarbonisation.
Great. Well, the buzzword I wanted to come on to from what you said there is stakeholder engagement. So it does sound there that a lot of businesses are sitting ready to do this, a lot of finance is sitting ready to support this. So what are the big challenges next? Is it perhaps policy, or is it perhaps technology, or is it something else?
So I think in various countries, policy is moving forward at a rapid pace, and I think that's why we've seen such enthusiasm for hydrogen, for example, in Europe, because there's been kind of a large move from governments in terms of kind of creating those pathways through policies for commercialization of those technologies. So government intervention is kind of tick that box. That's happened in various different countries, and I think we'll continue to see that globally. Technology is a key part in terms of, is the technology there, and I'll combine that with innovation. So technology and innovation are hand in hand, and I think we continue to see more and more companies innovating and looking to make looking to kind of reduce costs, which is the ultimate kind of driver when we look at economies of scale for commercialization. Cost is a huge factor, and just to put that into context, kind of if you look at the cost, if we look at CCUS, for example, the cost of capturing a ton of carbon right now is between kind of $100 and $600, right, depending on what technology you use. Someone may call in and I may get kind of abusive messages saying, no, it's actually now 60. But to put that into context, let's use 100 as the kind of the bottom cost there. Current carbon pricing in EU in terms of euros per ton is about 38. In fact, last I checked in February, it was 38, and that was an all-time high, right? And so you look at that discrepancy between the two, 38 and 100. There's a lot of gap to make up, and so government intervention is a huge part of that. Technology, innovation, and economies of scale are all critical factors in terms of driving that ultimately commercial competitiveness versus kind of current solutions. And so I think that's what the focus is on, and I think what gives people hope around these kind of new energies is wind and solar. Those are solar PV. Those were the kind of forerunners of this kind of decarbonisation and this revolution that we've seen. And when wind and solar PV first kind of came onto the scene, there was a huge amount of doubt about the kind of long-term commercialization without kind of government incentives of those two technologies. And everyone that was in the kind of doubt camp, and I'll include myself in that, has been proved vastly wrong. And so I think when people are looking at this, they're looking at it with a lot more kind of hope and expectation than they did with wind and solar when those two technologies started to take shape.
Great. Well, that's all the questions we have time for this video. I think that's a great positive note to end on. So thank you so much, Ben, for your time today.
Well, thank you, Sarah, and hopefully speak soon.
Great. I will stop the recording then.